a silent storm is rising again. Bitcoin, the digital gold of a new generation. In 2025, it's back, bigger, louder, and ready to rewrite America's economy. This isn't just about code or numbers on a screen. It's about a fundamental shift in how we see money, power, and freedom. For years, it was dismissed as a fad, a bubble, a tool for the fringes. But now, the giants of Wall Street are waking up, the headlines are buzzing, and a new generation is placing its bets. The question is no longer if digital currency will change the world, but how and when. This is the story of how a single idea is challenging a century-old financial system, and why 2025 might be its most important year yet. It all began back in 2009 with a whisper that would soon become a roar. An unknown genius, or perhaps a group of them, operating under the pseudonym Satoshi Nakamoto, published a 9-page white paper. The title was simple: Bitcoin, a peer-to-peer electronic cash system. But its message was revolutionary. In the smoldering ashes of the 2008 financial crisis, when trust in banks and governments was at an all-time low, this paper offered a radical alternative. It proposed a system where transactions didn't need a middleman. No banks, no clearinghouses, just pure, unbreakable mathematics. The core idea? Trust math, not institutions. At first, only a handful of cryptographers and tech enthusiasts paid attention, trading messages on obscure forums. They saw the potential not just for a new kind of money, but for a new kind of trust. By 2013, the whisper had turned into a noticeable hum. The price of one Bitcoin, once worth fractions of a penny, incredibly crossed the $1,000 mark. The world started to take notice. Early adopters, mostly programmers and tech idealists who had been mining on their home computers, suddenly found themselves with significant wealth. They weren't just investors, they were pioneers. The media caught on, and stories of Bitcoin millionaires began to surface, fueling a wave of curiosity and speculation. This was America's new digital gold rush. Instead of pickaxes and covered wagons, the tools were keyboards and processing power. It was a race into uncharted territory, driven by the belief that this digital asset could be the foundation of a new financial frontier, a place where the old rules no longer applied. Then came 2017, the year of pure, unadulterated mania. The hum became a deafening roar. Bitcoin's price exploded, rocketing from under $1,000 at the start of the year to nearly $20,000 by December. Everyone, from your college roommate to your barber, seemed to be talking about it. The phrase "to the moon" became a rallying cry, echoing across social media and financial news networks. Conferences were packed, exchanges were overloaded, and a sense of FOMO, fear of missing out, gripped the public. It felt like a party that would never end. And then, just as quickly as it rose, it crashed. The bubble burst, prices plummeted, and fortunes were lost overnight. Skeptics declared it dead, once and for all. But for Bitcoin, every crash has proven to be a crucible, burning away the hype and leaving behind a stronger, more resilient network. 4 years later, in 2021, the game changed again. This wasn't just about retail investors anymore. The corporations had arrived. The corporate wave began when companies like MicroStrategy started converting their cash reserves into Bitcoin, treating it as a treasury asset. But the real earthquake hit when Tesla announced it had bought $1.5 billion worth of Bitcoin. Elon Musk's tweets could move the market in an instant. At the same time, cities like Miami were rebranding themselves as Crypto City, actively courting the industry. It seemed Bitcoin was finally going mainstream. But then the world was hit by a perfect storm: surging inflation, geopolitical conflict, and widespread economic panic. Just like traditional markets, crypto plunged. Bitcoin fell hard, but this time, something was different. The believers, the long-term holders, stayed put. They saw the crash not as an end, but as another test of the network's strength. At the heart of Bitcoin's design is a brilliant mechanism that ensures its scarcity: the halving. Every 4 years, or more precisely, every 210,000 blocks mined, the reward given to miners for creating new coins is cut in half. This process is hard-coded into the network and cannot be changed. It means that the supply of new Bitcoin entering circulation slows down over time. History shows us a clear pattern. Each halving, in 2012, 2016, and 2020, has been followed by a significant bull run. The reduced supply, combined with steady or rising demand, creates powerful upward pressure on the price. The 2024 halving was no different. It lit the fuse once again, setting the stage for what many believed would be the next major cycle. It as a built-in economic event that transforms Bitcoin from just a currency into a provably scarce digital asset. And that brings us to today, 2025. This cycle is unlike any other because the institutions are finally here. For years, they watched from the sidelines, skeptical and cautious. Now they're all in. Names that define global finance, BlackRock, Fidelity, JP Morgan, have entered the arena. The most significant development was the U.S. Securities and Exchange Commission's approval of spot Bitcoin ETFs, or exchange-traded funds. This single decision unlocked the floodgates. It gave everyday investors, pension funds, and wealth managers a simple, regulated way to get exposure to Bitcoin through their regular brokerage accounts. No more complex wallets or private keys. The result? Trillions of dollars in institutional capital, which had been waiting for a safe entry point, now have a clear path into the market. This isn't just another wave, it's a tsunami of capital. With this institutional tidal wave, the predictions have become bolder than ever before. Respected analysts are no longer talking about small gains. They're projecting price targets of $150,000, $250,000, or even higher for a single Bitcoin. They're calling this the super cycle. The theory is that the combination of the halving supply shock and the unprecedented demand from ETFs will create a rally that dwarfs all previous ones. This isn't just about the price going up. It's about a reevaluation of Bitcoin's role in the global financial system. It's being seen less as a speculative bet and more as a legitimate store of value, a digital equivalent to gold. Proponents argue this isn't just another market rally. It's a revolution in the very definition of money, and it's happening right now. But let's be clear. Every boom hides significant danger. The world of crypto is still the Wild West in many ways. For every legitimate project, there are a dozen scams. For every savvy investor, there are thousands drawn in by hype who stand to lose everything. The allure of quick fortunes brings out bad actors who create fake tokens, run pump-and-dump schemes, and execute sophisticated hacks. On top of that, the regulatory landscape is constantly shifting. Governments around the world are still deciding how to handle this new asset class, and a sudden crackdown could send markets tumbling. In this volatile environment, one wrong move, one click on a bad link, or one poorly timed trade can make a fortune vanish in an instant. In crypto, knowledge isn't just power, it's your shield. So, what does the future hold? It's bigger than just price charts and trading. We are witnessing the beginning of a new financial infrastructure being built from the ground up. The technology that powers Bitcoin, the blockchain, has the potential to transform everything. Imagine a world where you can buy your coffee, secure a mortgage, or receive your salary directly on-chain, without intermediaries taking a cut. A world where ownership is transparent and transactions are instant. This is the promise. Bitcoin isn't just about getting rich. For many, it's about financial sovereignty, inclusivity, and freedom from a system they feel has left them behind. It represents a chance to build something new. The new American dream may not be a house with a white picket fence, but a stake in a decentralized future. That future has begun. Thank you for watching. If you want to be part of this journey and learn more, make sure to subscribe and hit that notification bell.